Hi, this is AJ Macdonald with Macdonald Financial Services. I have Devin Jones here, and today we're going to talk about if you should pay off your mortgage early or should you take that extra money and invest. So what do you think, Devin?
We've had this come up a time or two, wouldn't you say, over the
Today?
years? Today, yeah, we do hear this. We do get this question quite frequently. So, yeah, it's a great question. It kind of depends on your financial situation and where you're at, what stage you're in, whether that be pre-retiree or retiree. So that's one of the things that it's dependent on, I guess. Depending on your rate, what your mortgage rate is.
Mm-hmm.
I mean, I've I've talked to people and they've said, their rate is super low, sub 3, and they said they'd sell one of their kids before they'd sell that mortgage. So, there's it's dependent, right? So I think it's personal preference, and that's where we come in to help, and we kind of mitigate some of those.
Well, that's exactly right. I like to think that there's two decisions to be made. Number one is the finance part of it, and then there's the emotion side of it. So financially, does it make sense if you've got, as you said, a very low mortgage rate, which 80% of the mortgages are under 4% today out in the marketplace, and so that's a really low rate. That's cheap money. We may not see that cheap money for quite some time,
Right?
If ever.
If ever.
Again. So the finance side of it, does it make sense to take that extra money and put it into the market if you're so inclined? Put it in the bank. Back not too long ago, you could put money into the bank, into a savings account, and get 5, or a CD. So if you had a sub 4 or even 3%, you'd be money ahead if you didn't do that. If you put it into the market and historic averages played out, well, then you'd be a lot farther ahead.
Mm-hmm. Mm-hmm. So some of it's depending on your risk tolerance.
For sure. And then, so that's the financial, which Devin and I can sit down and go over that with everyone with their individual situation. But then there's the emotion side of it. And I like to say, are you going to sleep better at night knowing your house is paid for?
Some people, that's yes. Some people don't care. Some people know they'll never pay their house off.
Exactly. So that's a tough one. That's, again, per individual. Sometimes we have husband and wife, and they don't see eye to eye on that either. So that makes it difficult. So those are really, to me, the two decisions that need to be made. There's the financial decision, does it make sense, or the emotional decision. So, anything else to add?
No. The only other thing I'd add to that is, say your mortgage rate is at 5% and you pay that off. Well, you're 5% ahead, right? You're not paying somebody 5% anymore. Mm-hmm. So you've got that side of it. But again, if it's sub 3, sub 4, like AJ mentioned, a lot of people are out there with a sub 4 mortgage. It probably makes some sense to get some professional guidance as to whether you pay that off or not. So
that's exactly right. Now, we have had other people, in conclusion, because you have your house paid for doesn't mean your bills go away.
That's true. That's true. You still have that insurance and the taxes due on it.
There's taxes, there's still insurance, there's
upkeep,
your monthly utilities, there's the maintenance. So don't think if you get your house paid for, you're in the clear, you don't have any other payments. That's not the case. So anyway, thanks for watching. If you have questions, please give the office a call. And we'll look forward to seeing you at our next video.